advertising was just one of many tailwinds that was actually helping Google do it again, raking in more money than ever before for second quarter in a row. Let's break things down with Baird's Sebastian, who credits the company's significant investments in data analytics, AI, and machine learning for much of its success. And Colin, it was interesting. Sundar Pichai didn't even kick off the call talking about advertising. He started by saying that Alphabet is now an AI-first company and sort of did the whole call through that lens.
Yeah, good morning. So it's really a story about innovation. Google's harvesting the benefits from billions of dollars of investment they've made in recent years on AI, on machine learning, technologies that make their services work better. You know, we've looked at it through the lens of higher expenses. Now we're seeing it through the lens of faster revenues. And they're getting better at deploying apps and services to consumers, something that they've been criticized for in the past not doing as good a job with.
Right. So they're doing a good job. They were able to avoid Apple's privacy changes. But at the same time, that's not really the biggest threat, is it? It's regulatory. We saw last week that they cut the commission fee in app stores. Is that, in your view, one of the biggest threats to the company?
Yeah, there isn't a legitimate threat against their core search business. Just the scale and reach and the innovation there. Almost impossible for someone to disrupt them. So regulators are looking at that, and they can put handcuffs on Google at various stages. We don't think that they'll do anything that's existential as a threat to Google, but they have to be very wary of what's coming. So they are being more proactive. They are keeping an open platform. They're reducing fees on Google Play. They are open to working with competition. So it seems to us that they're doing a lot of what they can do, at least before the regulations become more formal.
Hey, Colin, on Twitter, I wonder if you think some of the weakness today is just a realization setting in that reaching their long-term monetizable DAU target is going to be a challenge, at least when you look at their track record of adding DAUs in a year or a 2-year period. I mean, is this we keep asking this question, is Twitter just destined to be niche on a relative basis?
Yeah, it's really a great question. I mean, as much as looking at Twitter through the lens of what happened to Snap and Facebook, I mean, the real story here is Twitter has to spend more upfront to drive more product innovation to try to capture an inflection in usage and users. And we haven't seen that happen yet. They're throwing a lot of innovation at the wall, so to speak, and some of it is working, some of it is not, but we haven't seen that inflection in usage. And quite frankly, to get to their now 2-year out targets, they have to drive significant growth in users, and I think that's a big point around what's causing investors some hesitation today.
Colin, given Alphabet's results, given Spotify's results, given what we heard from Adobe's CEO yesterday about first-party data and privacy being fine, what do you think now of Facebook's argument and framing of this, that Apple's iOS change is not about privacy, but it's about control, and that it's actually bad for small and medium business? It seems to be playing out in a way that's a bit more nuanced than that.
Well, I think both are true. Clearly, the changes Apple made have benefited its own advertising business. They don't play by the same rules with their own data. So there is that. Secondly, it is about privacy. They are putting constraints on sharing data on people, on individuals. And if you've built your advertising business relying on using that data, you're hurting right now. If you built your business on your own first-party data, like Google has, for example, and others, then you're not feeling the pain as much. And so I think it's really about both. Obviously, it's very self-serving from Apple's point of view.
Yeah, and Google was well positioned for it. Colin, lastly, a few words on cloud, missing expectations. CFO Ruth Porat told me that there wasn't any one particular thing, but you did see sort of losses a little bit larger than the street expected as well. What's your thought?
Well, I mean, Google Cloud, I'd say they are very much a legitimate third player in that market. That's no longer a debate. A year ago, I think we were still asking questions about that. So the pace of growth is going to be a little bit bumpy. We saw at Google Cloud Next last week, or the week before, some real innovation in terms of machine learning, AI in the cloud. So I think that will be a growth driver going forward. But it's a very competitive market with Amazon and Microsoft. It's not like search where they can grow the size of 3 Twitters in one quarter. It's much more about how do they differentiate from Amazon and Microsoft. Long term, they're in a great position. Short term, it is a real battle.